Hi everyone, this is Raul Harad, CEO of DeepSafe. With another stream, I apologize, we're running a few minutes late. Today I wanted to talk to you guys about institutional adoption of um, crypto in general, but also DeFi by banks and traditional finance houses. So, for years, decentralized finance was seen as a direct threat to traditional banking, and it was a rebellious ecosystem designed to replace banks with code. But fast forward to today, and the narrative is shifting. Instead of resisting, banks and financial institutions are entering the blockchain space, integrating DeFi principles, and even launching their own digital asset initiatives. And this marks really one of the most significant shifts in modern finance, the convergence of traditional finance or TradFi and decentralized finance, DeFi. And you might wonder, well, why does this matter? And actually, it's really important. The adoption by institutionals is often considered a, let's call it quote unquote validation phase for emerging technology. So when major players like central banks, investment firms, or global payment networks begin to adopt blockchain, it signals that the technology has matured beyond experimentation and speculation. And for blockchain, institutional adoption specifically brings A, legitimacy, so a sign that DeFi and crypto are here to stay. B, liquidity, so institutional capital drives volume and really helps with price stability. And C, infrastructure growth. So as banks entry fosters regulatory clarity, uh, you have better on ramps for customers, on and off ramps, and essentially institutions are turning what was once kind of the crypto wild west into a more structured and scalable ecosystem. And why are banks moving to the blockchain? Well, they're embracing it, not just to keep up with the hype. Actually, they're doing it because of the clear and practical benefits, right? So one of them obviously is efficiency and cost reduction. So you have blockchain drastically cutting settlement times for cross-border transactions from days to seconds and eliminating the need for multiple intermediaries. And obviously, this reduces operational costs. Another important factor is transparency and security. So you have financial institutions using blockchain for real-time auditing, fraud detection, and for transparent transaction records. And of course, this helps improve not only the functioning of the financial institution, but the customer's trust, and the improvement of compliance, of course. We have new business models that are developing from tokenized assets to blockchain-based lendings, and banks are exploring new revenue streams that merge traditional services with DeFi's flexibility. And then finally, we have customer demand and competitive pressure. So, as younger generations and corporate clients increasingly use crypto, institutions are adapting to stay relevant and meet evolving payment preferences, right? So, if the people ask for it, the bank cannot just not offer the service, or they will just lose the new clients and some of the existing clients. So, we have examples of institutional adoption that have really marked, let's say, the DeFi and TradFi convergence space. We have JP Morgan that was one of actually the earliest adopters in blockchain in terms of banking, and they launched the JPM coin, which is a digital token for instant institutional payments. They developed Onyx, which is a blockchain-based platform for wholesale payments and tokenized assets. And they actually tested DeFi protocols for interbank lending, proving that traditional systems can integrate with decentralized networks. We have Goldman Sachs that is exploring the tokenization of real world assets, such as bonds and funds. They built a digital asset platform to issue tokenized financial instruments. And Goldman Sachs has also partnered with blockchain firms to pilot projects involving digital bonds and on chain settlements. Visa and MasterCard as well have partnered. For example, Visa has partnered with USDC, Circle, which is the issuer of USDC stablecoin. And MasterCard is offering banks and fintechs access to crypto transactions services and blockchain based settlement systems. And then finally, of course, we have central banks, right? We have a lot of central banks that are developing central bank digital currencies or CBDCs, which is effectively blockchain-based digital cash. And the idea is for these CBDCs to bridge the gap between regulated finance and digital innovation, providing that even the most conservative institutions recognize blockchain's potential. Um, in terms of how TradFi is entering DeFi, right, we also have a lot of pilot programs on uh, private blockchains, growing a number of or exploring a number of DeFi-like systems using smart contracts, tokenization, decentralized settlements mechanisms. We've talked before about real-world asset tokenization, and this is where institutions are converting traditional assets like real estate, bonds, equities, etc., into blockchain-based tokens. And so what this does is it not only allows for a 24-hour, 7-day trading cycle, but it allows for things like fractional ownership and global liquidity access. We have DeFi lending and yield strategies. So some institutions are experimenting with DeFi protocols for on-chain liquidity management. So earning yield through decentralized platforms while maintaining compliance. Blockchain infrastructure partnerships have been a big one. So banks are collaborating with firms like Polygon, Avalanche, Chainlink, etc., to build secure, scalable financial ecosystems that integrate with Web3 technologies. And then we have institutional grade custody and compliance tools, right? So to meet regulatory standards, firms are using specialized custody solutions and KYC, AML, compliance DeFi protocols that create a permission DeFi layer suited for more traditional players. In terms of benefits of institutional DeFi adoption, of course, we have number one is the massive liquidity inflow. So with institutionals comes money, and with money comes strength in the DeFi markets and less volatility. We have, of course, a technological advancement where collaboration accelerates blockchain R&D and infrastructure growth. Excuse me. We have the legitimization of crypto. So the more institutionals that get involved, the more that crypto becomes an accepted and trusted payment or even exchange or storage of value. The innovation of financial products. So as I mentioned, hybrid TradFi and DeFi products that combine blockchain speed and security with regulatory safety. And then the inclusion and access, right? So tokenizing and blockchain reduce entry barriers for global participants. Um, and oh, apologize. There was just a bit of stuff going on here. But so as I was mentioning, the impact on financial services, consumers and businesses are gaining faster, cheaper access to investment, lending, payment services, and often this is done on chain without intermediaries. Platforms managed by banks and fintechs now support crypto alongside traditional assets with APIs and infrastructure offered for daily transaction flows between merchants and customers. And of course, we have regulation, technology advancement, and client demand continuing to shape the rapid evolution and institutionalization of digital assets in the banking sector. In terms of challenges ahead, of course, we always have regulatory uncertainty, interoperability issues, which is something that, of course, DeepSafe solves and works in making sure that this happens seamlessly. Security risks in smart contracts and bridges, which again is something that DeepSafe addresses in a way that completely eliminates a lot of these risks and helps manage the rest. And then, of course, we have just the cultural resistance of traditional financial institutions. But just to conclude, the institutional shift into blockchain and DeFi marks a pivotal turning point in the evolution of global finance. Banks once saw crypto as a threat. Now they are embracing it as the future of efficiency, transparency, and innovation. And from tokenized assets to DeFi lending and CBDCs, the financial system is being reimagined. So, not by startups alone, but really by institutionals as well. And in the next decade, the line between TradFi and DeFi will blur completely. And the question will no longer be will banks adopt blockchain, but rather how much of finance will be built on it. All right, so with that, I will end the stream. Thank you all for joining me. And of course, as always, if you have any questions, please reach out to us via social media or email. We'll be happy to address those. And have a great day, evening, or night,